There. Hi everybody, good morning, good night for you people in other areas of the world. Here in Europe it's a new morning and we have quite a few developments to talk you through. Let's see, can you see me? Okay, we'll begin talking about quite a few developments that we had overnight. I'll switch to the screen. All right. Okay, so let's begin with Europe. Yesterday we had Mario Draghi speaking. Actually, he didn't say anything new. He didn't drag the euro down, and in many cases, no news is good news for the euro. He did open the door for more QE, but it wasn't anything that we haven't heard before. Specifically, nothing we haven't heard before in the press conference back in September, early September. So here's the chart. Here's the euro-dollar hourly chart. We see a nice positive reaction. If the ECB isn't in a rush to print more euros, then the euro can rise. If Draghi hesitates, we have a stronger euro. So we've seen it struggle earlier yesterday, if you tuned up for the show, between 111 and 111.50. And then it was struggling with this 111.50 line, and now it's higher, 112.20. We marked 112.10 as some resistance of sorts. Now we're seeing an attempt to break even higher, 112.22. You can see. Can you see the chart, Jake? Anyway, let's go back to let's share the screen with the small presentation I prepared. Another development we had yesterday is the Canadian dollar. Canadian dollar touched the lowest since 2004. And why did that happen? Well, that happened because retail sales were weak. Let's look at the economic calendar. We had downwards revisions, and now we had, more specifically, core retail sales in Canada fell below expectations. They just were flat instead of rising 0.4. And as we mentioned yesterday, the Canadian dollar doesn't need too many reasons to slide, to fall. So it took the opportunity. Dollar CAD rose above, let's go to the chart of dollar CAD. It rose above 133, which was a key level, and then hit even higher levels. The peak was just under 133.60. So it actually broke not only the previous highs of this year, the cycle highs, it also broke above the levels seen in the peak of the financial crisis in 2009. So we had it retreat. Now it's at 133.20. But all in all, the Canadian dollar is under the cosh, if you wish. That was an important development yesterday. Perfect, glad that you can see the screen. Canadian dollar was not the only commodity currency that suffered yesterday and also today. So the Aussie dollar, we talked about how it was hit by Chinese figures. In China, we had a weak manufacturing PMI, and we had the Australian dollar slip. So let's move to the chart. Oh, we have even an extension of the fall. So if you can see where I'm pointing at now, that was the fall seen yesterday around the Chinese news. Then we had, some kind of recovery, but then, continued fall. As you can see, 70 is not a real support line. It was more some kind of a battle line. I think that now we can say that the breakdown is confirmed. Just happened in the past hour or so. That the pair extended its losses and fell even lower. We didn't have any new developments in Australia, but commodity currencies are suffering. Let's go back to the presentation. Another news, we talked yesterday about the scandal in Volkswagen, the German automaker. Well, it does have correlation with Forex because it impacted all stock markets, and when stock markets go down, we have more demand for safe haven currencies. Yesterday, the development was that the chief, Winterkorn, I think his name is, he decided to quit. I think it was quite expected. I think that the scandal will, of course, hurt shareholders of Volkswagen and will be big business for the auto industry. But I think that from today onwards, or from tomorrow onwards, it'll be disconnected from foreign exchange. So I think we had an impact from that, but that's over. Another interesting development, Bill Gross, sometimes known as the king of bonds, has a lot of influence. He said the Fed should hike rates now. Why is that? Because zero interest rates is something that hurts savers, something that at the moment doesn't help the real economy at all, and it is needed to raise rates in order to steer real economic activity. This is also a call heard from emerging markets. Many are just suffering from the uncertainty related to nobody knows when the Fed is going to raise rates. For us as people in the Forex market, it's, I think, uncertainty also provides opportunity, so it's not all that bad. And the last development we had overnight is news from New Zealand. The Reserve Bank of New Zealand is hesitating about the next move. We talked yesterday about New Zealand dollar. Well, they're another rate cut is expected in New Zealand, but it's not that certain now. I think that enabled the Kiwi dollar to stabilize, as you can see. Let me zoom out just a bit. The trend is still quite down, but at least we have some stabilization. It's not falling as sharply as the Canadian dollar and not its peer Australian dollar. So if the Reserve Bank of New Zealand thinks that maybe things are okay now, or they're not so sure, this hesitation helps the Kiwi dollar. Okay, what else do we have in store? Well, before we move to today's developments, let's see if we have some questions. Well, actually, we do. I know that. I've seen Jake's question earlier. Questions are certainly encouraged here. The idea is to speak with the community. I'm not sure I can answer any question, but I'll do my best. So, Jake asks, hi, Yohay, question, is it better to actively take profit and scale back into a long-term position or just wait it out? In general, I think it's better to trade a bit longer term. It's less tension for the trader, less noise in markets, so there's better chance of enjoying the fundamental move, the stronger move. But if it's better to take profit or and scale back, then I don't have a clear answer for that. On one hand, if you take profit early, that means you're changing your risk-reward ratio. It means if you expected a risk-reward ratio of for every trade that you lose 10 pips, you gain 30 in another, or something like that, or you lose 3 trades, but in one trade you make a lot of money, but if in that winning trade you scale back and you don't take all the profit, then, well, it's not, you don't take all the profit and your risk-reward ratio goes down. On the other hand, if you hesitate, if you want to feel better safe than sorry, then that's the way to go. Specifically, I see that you have an example here for the Australian dollar or New Zealand dollar or euro, which each predicted to continue falling vs the US dollar. I look forward to your analysis. Regarding Elam. Well, Australian dollar and the New Zealand dollar are basically in the same camp. They're commodity currencies. There is a difference. New Zealand exports milk mostly, I mean, dairy products, agriculture products, and for Australia it's more copper, iron ore. I think in general Australia is a bit more exposed than New Zealand to the global turndown. But regarding the euro has different behavior. The euro has a huge positive surplus, and it's been working as a funding currency. So that means it sometimes works as a safe haven currency. In times of trouble, we've seen that with the Greek crisis, we actually had good news regarding Greece and the euro fell, or we had bad news and the euro strengthened. So it's not that straightforward anymore. And look forward to your analysis of how the market reacts to Yellen. Yeah, we'll speak about upcoming events really shortly. Okay, let's move back from me back to the screen. Right, you can see the presentation. Okay, so we have on the agenda today German IFO business climate. Actually, it was released just now, so let's take a look at the figures. That's Germany's #1 think tank, and they have a lot of influence, and the numbers are out actually. Okay, they're not too bad. The headline number is the IFO business climate. It actually came out better than expected. I must say I'm surprised because last week we had similar figures from another institution, from Zoo, and they were worse than expected. So to see here 108.5 is positive news. That's one of the reasons I think euro dollar is stronger. Let's take a look at euro dollar. Oh no, actually it's around the same levels. Current assessment, that's the only figure that is less than perfect, as Americans say. It's just under expectations at 114. But expectations for the future are okay. And all in all, I think it's an okay report. Huge positive surplus. Germany and other European countries export a lot of goods to China and to other places. That means that they export more than they import. That means that there is a flow of euros. There's flow of money into the Eurozone. Okay, let's go back to the day's events. Then we have, oh, I had a mistake here. It's Japanese Prime Minister Shinzo Abe talks. Japan has been in vacation in general in the past few days. And now they're back, and the Prime Minister, he regained confidence. There was a confidence vote in his own LDP party, and now he wants to present a new agenda. We'll hear from him in less than 2 hours. Will he offer more news to weaken the yen? Maybe. More government stimulus, more yen printing. Yen printing is in the realm of the Bank of Japan, but more government stimulus could also weaken the yen. But if we look here at the chart of dollar yen, we see what we talked about yesterday. It's basically hugging the 120 level. It's like a magnet for the pair. If we zoom out just a bit, you can see, I didn't mark it on the screen, but there is some kind of triangle here. So we have lower highs and higher lows. It's all sort of converging to one place, and when we have this kind of pattern, we usually have an explosion. To the upside, to the downside, it depends on what's going on in terms of the global mood. So if the mood is negative, yen could strengthen. The yen is also a safe haven currency. We could see it fall. So the levels we're watching are, of course, well, below 120 we have 119.50, 119, 119.20, and then if you can see here on August 24th, 25th, we had this spike low. I wouldn't look at that level, but in general, markets are looking at 115. It's a sort of another round number. But if we have no bad news in markets, and we have more stimulus from the Bank of Japan, from the Japanese government, we could see the pair go up. 125.80, I think, was the peak level. So there's lots of room also on the upside. A lot depends, two factors, on the global mood and if the Prime Minister and the Bank of Japan present more stimulus. The Prime Minister speaks later today. The Bank of Japan has many meetings, meets 14 times every year, but the most important meeting that we're looking at is only at the end of October, October 30th. So that's what's going on in the yen. Another factor for the yen is what we have on the other side of the day at 11:30 p.m. GMT. It's going to be nighttime here in Europe. We have fresh inflation data. Let's see. So we have lots of figures. The most important ones are the ones for Tokyo, for the capital. That's because these are fresh figures for September and not figures for the national CPI is for August. So it's a bit confusing, but in general, the Bank of Japan wants to see inflation reach 2% a year over a year, and that's quite a hard task. So you can see here, for example, year over year, excluding food and energy in Tokyo, this one right here, it stands only at 0.4%. Okay, so that's well below the target, even if it excludes the falling price of oil and all the volatile items, it still looks quite poor. So will the Bank of Japan introduce more stimulus? Will we have more stimulus from the government? That's still to be seen. While Shinzo Abe has a lot of support in his own party, he has less support in the public, in the Japanese public, because he did some unpopular moves regarding nationalistic clauses in the Constitution. I didn't really go in depth into that, but he might want to present more stimulus to help the economy, and then that could weaken the yen. So moving on to next events, then the focus shifts to the United States. At 12:30, we have durable goods orders and jobless claims. Durable goods jobless claims are released every week. Let's see what expectations stand at. If I can find. All right. So jobless claims are less important now. Let's brush over it quickly. They're expected to rise from 264 to 271, basically in range. More important stuff is durable goods orders. That's important, especially core orders, because it reflects investment, long-term investment, the long-term direction in the economy. That's why it's called also durable. They last for at least 3 years. Anyway, expectations stand according to the FX Street calendar here on Forex Crunch. For X transportation, which is an important measure because sometimes orders of planes screw the numbers. We're expecting a small rise of 0.1% month over month for August after 0.4%. That's for me the most important figure to watch. The headline number is expected to fall by 2%, but that's again aviation related usually. So these are important numbers in the US at 12:30 GMT. And then at 2 GMT, we have new home sales. More important thing is not the change here, but actually the general level. We had a nice figure of 507,000 or 0.507 million in July, which was, well, okay, that's an annualized level. And now we're expecting more of the same, more or less, 515,000. Why are new home sales important? First of all, they're important because the Fed says they're important. But a more serious answer would be because every sale of a new home triggers afterwards economic activity in infrastructure such as well, sewer, roads, schools, everything related, new furniture. So this is sort of a good measure for the economy in general. And then, well, Jake's question, and I think also the most important event of the day, it comes at a very, very illiquid hour. Janet Yellen, the chair of the Federal Reserve, speaks in Boston about inflation dynamics and monetary policy. So sometimes she speaks about community banking or whatever, and if the title of the speech is not related to monetary policy, she will not say anything related to monetary policy. But in this case, it's, well, monetary policy appears in the title, so there's not much to think about. So, well, the Federal Reserve decided not to raise rates a week ago. That's still a big event. It still has a lot of impact on financial markets. The big question is, will they or won't they in December? And another question is, if they hesitated about hiking the rates, is it good for markets because we have more longer period of low rates, or is the reason why they didn't raise rates, that is, they're very dovish, they fear about the global economy, they're worried, is that a reason for everybody to worry as well? So we might get some answers. Janet Yellen is very careful. But I think that if she's going to talk about inflation dynamics, it's going to move markets. Inflation is the missing piece. The Fed has two mandates, employment and inflation. Employment is doing quite well. Markets are getting closer to full employment. There are steady job gains of around 200,000 every year, but every month, sorry. But inflation isn't going up. One of the reasons is that wages are not going up. So they did show some kind of lack of confidence if inflation will indeed reach the long-term target. So we're expecting to hear from her about that. Another important thing to watch regarding this is the time. As I mentioned, 9 GMT is more or less when only Australia is awake. Well, many other people are awake, but when markets in Australia and New Zealand are active, it's before the Tokyo Open, after the New York close. That means that liquidity is very thin. That means that every market reaction might be exaggerated, might break technical lines. So if you trade her speech, you should do that with lower leverage and more caution. So that's something to think about. We'll have a further reaction after Tokyo Opens, and another reaction, two more reactions on Friday in the European Open, and then in the US Open towards the end of the week. So it's the same with the Fed. There's an initial reaction on thinner liquidity, and then full reaction later on. And last event for the day, let's go back to the screen. We have inflation figures in Japan. We already talked about that. And let's see, any more questions before we take a look at more charts? I'll take a sip of water here. Okay, waiting your questions. Anyway, we talked about a few currency pairs. Let's talk about a few more. Let's go back to euro dollar. So lines we're watching here. Latest peak 112.20, 23. I think it works now as resistance. It also worked as support a few days ago. If you can see this line right here. Below it we have 111.50. If you can also see it sort of separated the ranges. We did have the pair battling over this line yesterday. On the downside we have 111. Of course, that's the bottom that we've seen yesterday. And below that is 110.80. And of course 110, which is a very round number. On the upside, as we said, no news is good news. We have 112.90. It did work as resistance a few days ago. And then, of course, the really big levels are, one is a very historic one, 113.73. That black line here, it worked as support back in 2003, 12 years ago, but also recently it capped the pair a few days ago. And of course, the next level to watch is 114.60. If we move to the daily chart, you can see that this was also this second, the top black line, also capped the pair back in May, and also now with the Fed last week in September. So all in all, this is a very, very important line to the upside. On the downside, the most important line is 108.20, 108.10, sorry, and but there is a long way to go to the downside. So that's euro dollar. Pound dollar, we don't have many events regarding the pound this week, but it doesn't mean it doesn't move. We have lots of action right here. In general, the pound is suffering. It's now in the commodity currencies pack because it's not a safe haven like the euro or the yen, but it's so it's sold off when the euro, the yen, and the dollar rise. But it's important to remember that also in the UK, a rate rise is expected this year. So, sorry, after the Fed, probably somewhere in 2016, but the next move of the Bank of England is to raise rates, not to cut rates. So perhaps this could be a buy opportunity, but things need to improve everywhere. Next week we have more UK events. Let's talk about a few lines here. well, after the break under 153, 153 turns into resistance. 153.60 is sort of minor resistance ahead, and then 154.10. On the downside, we have 152.40 as a low, but 151.50 is the line I'm looking at a bit more closely. Dollar yen, well, we mentioned this earlier in the show. Very choppy, hugging the 120 line, not going anywhere fast, as they say. Let's move to the daily chart of dollar yen. Sort of a wide scope. You see it had much bigger movements, and now it's narrowing down into this triangle. And when things go into a triangle, eventually it will explode. I think my estimation, my analysis is that it will move to the upside and more stimulus. But if we have more bad news from China or another stock market sell-off, then of course it could go down. Dollar yen moves with stock markets, especially in Tokyo, but also in the United States. Let's move on to dollar CAD. We also mentioned this pair before. So the Canadian dollar is showing a lot of weakness. It has fallen quite a lot, falling with oil prices. And when oil prices do stabilize, the Canadian dollar doesn't rise that much with rising oil prices. But when oil prices fall, the Canadian dollar suffers a lot. Okay, so basically the markets want to sell the Canadian dollar. Now it's at 133.33, a very nice number. The peak so far just under 133.60, but bigger levels like 135 or 140 are eyed. So above 133, above these levels, we are at levels last seen in 2004. So support and resistance lines don't matter that much, but it's important at this moment to look at the bigger figures, 135, 140. On the downside, it's easier to talk about the downside because it's levels we've seen just now. So 133 that we mentioned. Below that we have 132.20, 131.70, and the wider range that we've seen lately before this recent break is just between round numbers of 130 and 133. Last week, around this area, we had dollar CAD finding support at 130 before shooting all the way up here. Okay. Aussie dollar, as we speak, the downfall continues. It's at 69.60. Australian dollar is quite weak. It's moving down with China. It's moving down with commodity prices, prices of copper, prices of iron. In addition, we have political change in Australia. Previous Prime Minister was ousted. We have a new government there. Some headlines in the Australian press are talking about doom and gloom for Australia, recession coming. There was already talk about the end of the mining boom. We had, I think it's a bit exaggerated. Australia is still a good place to live in, as far as everybody says. So there is more room for falls, especially with falling commodity prices, but I don't think we'll see 60 that soon. Many analysts are talking about 67 cents. That seems to me like a more realistic goal. Okay, let's just look at some levels on the daily chart. I hope you guys use daily or sometimes weekly charts and not only short-term charts, because it gives you a better look at the bigger picture. So 69 is a key level to the downside. We're not that far from that, 60 pips. Upside, of course, 70. We had a battle over there, similar to the battle that dollar yen has around 120. 70.60 is on the upside, 71, 71.60. And the post-Fed high of 72.70 is also an important level. In general, as I said, if you look at the bigger picture, it's down for the Aussie dollar. All right, let's cross the Tasman Sea to New Zealand. Same trend, down, 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 down. together with milk prices, together with the Chinese slowdown, the RBNZ cut rates. The change that we're seeing today between the Kiwi and the Aussie is that the Kiwi did manage to stabilize. 63.10 is resistance over there. We're seeing it trading in range. So it's between 62.40 and 62.90. It's still closer to the lows than to any kind of high, but at least it managed to stabilize because we think that the RBNZ will move a bit slower with cutting the rates at the moment. Let's move to the Swiss franc. Dollar Swiss 97.80. Quite a choppy chart. I'm personally not a fan of the Swiss franc. I think that's because the Swiss National Bank continues intervening. It's not really a free float. We do have the Swiss National Bank making efforts to weaken their currency from time to time. Anyway, levels to watch on the downside, 96.60 and 95.40. Of course, the round number of 95 is all important. On the upside, let's see if we can zoom out. It's 98, and of course, above that stands parity. Euro Swiss, that's the pair that actually matters more for the Swiss National Bank, and because, well, if you look at the map, Switzerland is surrounded by the European Union and specifically the Eurozone, Italy, Germany, France, Austria. All those countries are around Switzerland, and most of the trade is done with these countries. So Euro Swiss is around 109.40 at the moment. Of course, the round number of 110 is just above. 109 is also a round number. 108.20. These are the levels to watch if you're trading the Swiss franc against the euro. To a more interesting pair, euro pound, more interesting cross. It's currently closer to the highs at 73.30. In the higher end of the range, I think we can see here a much clearer pattern, a much clearer range. So we have 73.60 and 72.40. It's a well-defined range. We did see it break below the range beforehand to just 72. But if you have patience for less pips, more safer trading, I think this cross does have a nicer technical behavior than many others at the moment. In general, we had this this cross falling quite a lot because the European economy, Eurozone economy, is deteriorated, and in Britain we are expecting a rate rise because the economy is doing better. But in recent months we're seeing it chopping around after falling under 70, and I think it's looking for a new direction. Will it move up or will it resume the downtrend? It's an open question. But at this moment, with such a choppiness in recent months, or range trading if you wish, it's impossible to say at this moment that this is only a correction on the way down. We could see more down, another move to the downside, but we could see also another move to the upside. It's not like what we're seeing in Aussie dollar, or Kiwi dollar, or other pairs that have a clear trend. I think the trend here, we have a pause in the trend. Okay. Euro yen also here. Well, euro fell a lot. The yen strengthened. That was the bigger picture. The yen weakened beforehand. Now both of them are sort of safe haven currencies, so we're seeing ranges. I find the ranges here to be a bit more choppy, but perhaps we're beginning to see some kind of move to the downside. Let's see if I can try to draw this line as we speak. So we're seeing this kind of trend line. Whoops. No, that didn't work out for me. Anyway, we're seeing, oh, now it's working. So we're seeing the pair move a bit lower if you look at the trend line, because the euro is weakening more than the yen. But as I mentioned before, We could hear from Shinzo Abe. We could hear about more stimulus, also from the Bank of Japan. So there's this kind of currency war going on all over the world. The Japanese want a weaker yen, the ECB wants a weaker euro, and also the Fed hesitated regarding the rates just because of, or not only, but also because of the weaker US dollar. Okay, let's move on to the Dragon pound yen, a popular pair. Contrary to euro pound, this pair provides lots of pips, but it's also more risky, let's call it this way. But we have nice technical levels here. Very round number of 180 is clear support. We're currently at 183.30. To the upside, top line is 195 that I'm looking at, but we have 191.33, 188.25, and 183 on the top side. All in all, there are lots of pips to be gained or lost in this cross. We're open to other crosses as well. If you have, in general, if you have any questions, I'll be glad to answer. If you want me to cover more crosses, any feedback, good or bad, we're here. So let's go back to the small presentation and talk about the bigger themes in markets after we had an examination of the charts. So basically what we're saying is hesitation. I think I used this word a few times today. We have hesitation from the Fed. The Federal Reserve prefers to wait and see, to be more confident about inflation, to see more improvement in the labor market, to see financial markets stabilize, to be more certain about China. In general, it doesn't want to move too soon. The doves are in control. But we thought we'll see more dovishness, more readiness to act from the ECB, readiness to print more euros, to enlarge QE, to extend its end date beyond September 2016. But we didn't really get that. So we had various speakers from the European Central Bank, some of them a bit more hawkish, some a bit more dovish, some of them saying we should probably act soon, the others we should have a steady hand, wait and see. And Draghi also, he's the chief, and he said, well, not that sure. We'll have to wait and receive more figures. So, okay, that's not so surprising because all in all, we have just 3 weeks passed since the ECB meeting, and we still don't know exactly what's going on in China. So it makes sense, but for markets, it just means higher uncertainty and more movements, more volatility in the euro-dollar, the chart that you're seeing here. Okay, so these themes of hesitation continue. Now I mentioned China. Also here we have, as I said, uncertainty. China is not an emerging market anymore. It's the world's second largest economy. It's still considered an emerging market, but I think it has emerged. Now, while I think the Chinese economy is second largest and it's about 14 or 15% of the global economy, if we look at growth, it accounts for 30% of global growth. So if we look to where we're going to see the next growth, it's China. And if we don't have that kind of growth in China, then, of course, the world is shaky and there is hesitation from the Fed and from the ECB. There is less hesitation from commodity currencies, as we talked about before. Dollar CAD, Aussie dollar, Kiwi dollar, all have their own characteristics, but all have a clear direction, which is down against the US dollar. Okay. Jake or somebody else, do you have more questions? Let's look to tomorrow's event. Let's look at the calendar and let's maybe take a peek at next week. Or tomorrow. We'll get into more details about this tomorrow, but We have more time, and we'll talk about what's ahead of us tomorrow. So, when we begin the show tomorrow, we have figures from Italy. They're not that important, but maybe we should look at also this country. It's the third largest economy in the Eurozone. Wage inflation is important for the Fed, important for the Bank of England, and also important in the Eurozone. But at the same time, we have more important figures from just when the show begins from the ECB. Money supply, private loans. The European Central Bank is trying to trigger more activity in the real economy. They want banks to lend more money. They want the money in circulation to grow. More economic activity, higher inflation. They have a target of 2% or a bit below. Currently, it's at 0.1%. And it's not only because of oil prices. So we'll get to learn. If we did see some kind of acceleration in money supply, so it's at an annual rate of 5.1%, and we're expecting it to rise just a bit. And also private loans, they've been actually negative for quite a while. We had loans contracting. That means less credit to businesses, less activity. But this has changed thanks to the ECB's policies, and now we have positive numbers. So we're expecting another improvement from 0.9 to 1%. And the key event of tomorrow, we'll of course dive into that in more detail, is the third and final read of GDP, of gross domestic product. That's expected to be confirmed at 3.7%. But as we know, revisions in the US can go wild, so any figure can come out of that. Under 3%, I think it's very negative. Above 4%, it'll be very positive. We also have speeches from Bullard, final figure from the University of Michigan regarding consumer confidence, and market services PMI. Yesterday we had the manufacturing PMI. It came out at 53, exactly as expected. And it's less important. In the United States, the ISM figures are more important than the market figures, which are important in Europe. Jake, you said tomorrow's news. Yeah, we'll talk about these events more in depth in tomorrow's show. We focus each time more on the events in the next 24 hours, but just I wanted to give you guys sort of some kind of sneak preview, as they say. So, any more questions? Anything else you would like me to tackle? Any currency pairs? Let's go back to euro dollar. We've seen it a bit off the highs. The highs were 120.20. Now we're at 111.93. All in all, it's at the top of the range. If we'll focus, if we'll zoom in a bit more, this is where we are now. More questions? No? Okay, let's wrap up, beginning from the top. So, wrapping up the live market open for today. We're reviewing the events from yesterday, which were quite significant. Draghi, ECB President Mario Draghi, didn't drag the euro down. He didn't offer anything new. Of course, they're ready to act, but no need. They're hesitating. This sent the euro up. If we talked about this yesterday, no news often is good news, and more action from the ECB was basically priced in. So if we didn't get any new hint, we had the euro going up. In addition, the Canadian dollar touched the lowest levels since 2004. 133.58 was the high. Retail sales, weak retail sales in Canada were the trigger for another move up. It seems that the markets want to sell the Canadian dollar on every opportunity. Other commodity currencies suffered as well. Aussie dollar slipped below 70 cents and even fell deeper to 69.60. In unrelated, Forex related news, but less important at the moment, the chief of quit. This means, I think, for us that this affair will have less impact on Forex markets. I don't think we're going to talk about that tomorrow. Another significant speech came from Bill Gross, who was considered once, or still is considered, the king of bonds. He wants a Fed hike now. I think his voice adds to the pressure for the Fed to hike in December. We haven't seen any immediate reaction to that, but I think there's growing pressure for the Fed to raise rates. And in New Zealand, hesitation once again. The RBNZ is hesitating about the next move. And that helped the Kiwi stabilize after huge falls. Looking from the past to the future, the near future, when we had the German IFO business climate, it came out a bit above expectations. It sort of supports the euro. We have a speech later on from Shinzo Abe. The Prime Minister of Japan is expected to present more stimulus that could weaken the yen. Dollar yen is around 120, hugging this level. Hopefully it'll take a new direction. Then important figures from the United States, US durable goods orders, which reflect investment and also jobless claims. And later on, new home sales, which sort of go hand in hand with the economy and trigger lots of activity. The Fed looks at core durable goods orders and new home sales in detail. And speaking about the Fed, the main event comes at a very illiquid time. Fed Chair Janet Yellen talks about inflation dynamics and monetary policy at 9 p.m. GMT, and this could cause markets to be a bit more tense towards the speech, and maybe to act a bit wildly because of the lack of liquidity when she does talk. A more significant reaction will be seen after Tokyo opens, and more importantly, when we speak tomorrow at the London Open. Yeah, and we have also inflation data from Japan that could also weaken the yen, perhaps. And the bigger themes of the markets: hesitation from the Fed, from the ECB, and from China. So that's the wrap up for today. But we have more questions from Jake. We'll have a minute or two to answer them. I'm still a bit confused about the whole trade surplus thing. How does it affect the euro? And dollar index. Well, I didn't mention the dollar index. I will mention it if there is demand, because the dollar index is mostly composed of the euro dollar. So better trade the euro dollar, I think, in my opinion. It's a bit antiquated, this dollar index. So you can look at the dollar index, but I think it's better to trade the euro. Regarding trade surplus thing, well, if a country exports more than it imports, and that's the case in Germany, and also the case for, well, Germany as part of the Eurozone, so the Eurozone in general, then we have more money flowing into the Eurozone because goods are coming out of the Eurozone. That means more money flows in. That means a stronger euro. In the United States, we have a deficit. That means the United States is importing more than it exports. So we have to fund that. So weaker dollar. But markets move mostly not from these basic things, but from speculation, from expectations about interest rates. I hope that explains that. Perhaps on a more quiet day we'll dive into that more in detail. I'm personally doing a webinar also for FX Rate on, we think it's October 1st, on all the moving parts of euro dollar, so you're welcome to attend. Well, I think that's it for today. I hope you learned something, and I wish you all safe trading and successful, of course. And we'll be here tomorrow. So thank you very much, and goodbye.